but I'm expecting price to go through this swing low. We're right
Order
here.
filled.
Anyway, coming into the day, I'm immediately bearish. Previous day lows, I think, are in sight to get taken. Basically, I'm kind of looking at market going down to here, but then we have this hourly displacement, so I wouldn't be surprised if market just dumps down to these lows. Honestly, I kind of like this PA. We've got a 5-minute uni here, bearish, so that's a 5-minute breaker. Well, we have an S&T uni, we have a 2022 model, so that's really powerful. But we have a nice inversion FEG, so you got to understand that no matter what goes on in the session today, we're going to be in a 4-hour inversion FEG here. What we're going to have a look at though is we're going to have a look at regular trading hours liquidity, and I want to see where this opening range gap is. Okay, that's really good. We've got an absolutely huge one above, which means we're probably not going to fill all of it, maybe even leave it unfilled, which can But what's interesting is the upper quadrant of this is right in line with this, so I'm going to draw this out in red right here. I like this. I like this gap up here. I'll be very interested to see if price goes up to there, not seeing it. That is absolutely fucking mad. I literally predicted that that's going to get respected. So that's a premium array. I like that VS. Okay.
Order filled.
I'm gonna give that a go. Quite like it. The RR's fine. Now I need to manage this position accordingly for my bearish bias. Yeah, I'll just leave that there as a TP for 2R. Liking the look of that so far. I'm willing to just hold this to 2 times risk, honestly. We can trim our stop now to that high. So what we need to do is we need to basically have a look at NASDAQ and the targets for it, so we don't get SMT'd out of this. Could make sense here to trim stops. I think this swing low is destined to get taken. expecting that maybe this is used, but then again the first presented FVG, bit jarring. I'm beginning to expect, actually, if we're going to be truly bearish, to have one or two massive black candles very momentarily. But I'm expecting price to go through this swing low. We're right here. And that is how you manage your risk and manage patience. So anyway, there we go. On a higher note, we made $708, so about $1,400 across both these accounts. We managed to get to 1.98 times risk. I'll always put 2 for the sake of the video. And we offered almost 3. We could have taken a partial here and then taken a partial just there, and we would have realized 2 are the same. But I decided it made sense to just get 2 are the same. And yeah, so I'm going to make a trade recap now, and I hope you enjoyed. And please, if you stay for the trade recaps and you already know your new concepts, you'll start to learn a bit. But yeah, so thanks for watching. Peace out, homies. See you later. What's up, guys? This is how I made $1,400 today, day trading the Micro-E-mini S&P 500 on TopStep. If you've seen the live recording just previous, you'll see that I have had a losing streak due to my psychological errors. This is something that I'm curbing, but when it comes to my technical analysis, I am honestly getting really goddamn flipping good at it, and this is why I revel in these trade recaps. So today I realised a smashing, no partials, just 2 times risk, low resistance liquidity run. Didn't feel the need to take a partial because I was so certain we were going to take out the previous day lows. And yeah, I kept my cool. Price struggled a bit when the Nasdaq took off, but I still held, stayed calm, trailed my stops. You know the picture. So as always, and by always I mean by once time, because I've only uploaded 1 video, but it will be always, I'm going to delete all my drawings and I'm going to re-go through the entire reasoning behind my trading position, so you don't just think I'm making it up, because I can explain it. So I'm doing that because I'm going to touch my trackpad. Yeah, so what the fuck? It's not working. There we go. Yeah, so delete my drawings and let's explain how this randomness here, I just knew price was going to go down and drop, and I don't just mean because it was going down as a result. So let's get into it then. As usual, I start my day on the daily. At the minute, we're obviously seeing the candles taking these lows out because it's just bloody happened. But I want you to understand that this candle here hadn't taken out this low. Okay? And what I liked was these 2 previous day lows on ES. Right? Hadn't taken each other out. These are called failure swings. If you get consecutively a lot of lows that didn't take out the one before it, that is a form of low resistance liquidity. Price will slice through that like a hot knife through butter, and it does it over and over again. Look over here. Failure swing, failure swing, failure swing, failure swing. Price will engineer this liquidity even for days, and then in a small while, it will just zap through it. This is a daily chart. Go look on the 1 minute chart, it will do the same thing. Price is fractal. Always remember that. The daily and the 1 minute chart is no different. They don't behave differently at all. They literally just take longer than each other because the dailies are longer than the minute, obviously. So, looking at these failure swings, going into the day, I immediately was suspicious for bearish price action. Of course, I'm just going to jump on shorts just because of that. So I dropped down to the 4-hour chart after the daily. Sometimes I go on the weekly just to get a little extra confirmation, because I've already outlined my weekly bias literally for weeks now. It's not changing because the weekly bias takes a while to change because it's weeks. So yeah, so I dropped down to the 4-hour. Okay. Now, understand that these lows we just marked out, again, weren't taken. So we were probably about up here or somewhere around about here earlier. And I wanted these lows to be taken. So I was bearish. But there was something more as well. We had closed on ES, similar to the last video, actually. You see this bullish FVG here, right? ES, this candle had closed beyond the consequent encroachment. The consequent encroachment of this FVG is in the middle, obviously, right here. And this candle here lovely respected it, which is a very bullish thing. But then as you saw this inversion here, not inversion, but this like almost inversion, we closed beyond the CE. While it's not as strong as an inversion, which is when you completely close beyond the gap, this close beyond the consequent encroachment tells you a story. If the body does that, it tells you a story, and that told me, okay, something's looking bearish here. But when you combine that with the funnily enough appearing fact that I'm looking at these two swing lows here, these failure swings, begin to get a bit of an idea like, okay, maybe we're a bit more bearish here than I even initially thought. Drop down to the 1 hour chart, and what I loved was, while this last hour I've just traded was what took us down, we were basically about here. These are the candles I was looking at, these little few. And we were coming into a 1 hourly displacement, a 1 hourly gap. So I was just like, okay, we're coming into an hourly gap. It's not much, but it's just another confluence on top of everything else I've said. So okay, hourly gap. But let's now get down to the 15-minute chart, where I do most of my work, where I really get sure about what's going on. But I'm going to mention something that I didn't mention in the last video, and that is weekly profiles. Now, I don't use every confluence I know every day. I literally, basically, know all my confluences and mold it around whatever the day's doing, okay? And that therefore means I don't always use certain concepts that I know because I don't feel like they're relevant. And although this one's probably always relevant, I just don't always look at it, but today I really wanted to. So before even going onto an intraday basis, which is down here, I actually zoomed out on the 15 because it's on the 15-minute chart where I like to do my weekly profiles. If you understand your open, high, low, close of the weekly power of 3, then you may understand why I was even more bearish today. This was why. Today is currently Wednesday, the 14th of January. Let's get this arrow off, okay? So therefore, Tuesday was the 13th. And Monday was the 12th. So let's just draw out Monday's beginning, which is that line. And we'll draw out Tuesday's beginning, which is here. And then we'll draw out Wednesday's beginning, which is here, the 14th. Cool. This is all New York time, as I hope you know. ICT teachers do things in New York time. Understanding the weekly power of 3, you usually, in a classic weekly power of 3, want to have Monday and Tuesday manipulate, Wednesday and Thursday continue the true move for the week. Again, it's not always like this. There's so many variations. This is the classic one. Often, you do not want to see Monday make the high or low of the week. You often want to see Tuesday or Wednesday make the high or low of the week. Reversal days, therefore, are very, very likely on Tuesdays because you can get high of the week made. Look at this. We have a Monday low of the week. 12th of Jan so far made the low of the week. If the week started at this red line, and this is the week so far until today, this low made the low of the week. Now, understanding I'm bearish for all the reasons I just said, I noticed, I was like, wait a minute, not only is this a low, this is a Monday low of the week. Monday oftentimes doesn't hold the lows or the highs. If you see a high or low of the week that's made on a Monday, especially if it's contra bias, yo, that is the most baitest thing, the most suspicious thing ever. You don't like it. Monday can sometimes just, in ridiculous heavy price action, Monday can just make the high and price doesn't stop. There's no complete answer. You have to understand that confluences aren't an answer on their own. You have coincidences. Confluences are just coincidences. They just occur with other ones. If you see a bunch of confluences that happen to happen at the same time, you're like, okay, price might be going up because all this is happening at the same time. Weird, huh? So that is why my Monday low of the week was very sus. But here's something even more beautiful about that. Gander your eyes to here. That is the high of the week made on a fucking Tuesday. Tuesday high of the week is more likely to happen. Normally in the weekly power of 3, you want the manipulation to happen on Monday and Tuesday. Price goes up, takes out liquidity. In this situation, we're at all-time highs, so there's no liquidity to take out other than, well, funnily enough, a high made on Monday. Look at that. We made a high on Monday, taking out this high here from last week. Fake. We don't like highs on Mondays. Tuesday takes it out anyway, so that's interesting. But anyway, Tuesday takes out the high of Monday, and Tuesday's made the high of the week. So basically, just to keep that a bit short and sweet, because Tuesday made the high of the week and Monday had made the low of the week so far, it was like so coincidental that along with these failure swings on the higher time frame, along with other things I'm about to mention, it just lines up. Confluences are about the stars aligning, okay? Just because I hate that I've lost 3 trades in a row before this one. The reason I have been losing trades is not actually that much because of my technical analysis. I will always lose trades because my technicals will be wrong sometimes, and I can't always know where price is going. Otherwise, I probably wouldn't be alive. But seriously, the reason I'm losing trades more than I want is because my psychology is not quite there, and I'm not ready to teach that because I need to master it first. But when it comes to the technicals, damn, I am all right, and that's why I've started to make these trade recaps. I just want to get that off my chest because resume is important. Anyway, so go down to the 15, and which I'm just going to get rid of this and this because it's in my way. So 15-minute chart. This is where I do all my work, as I said. So what I do is I mark out New York Stock Exchange Open at 9:30. I mark out London session, London Open Kill Zone more specifically, that begins at 2. And then I mark out Asian session, which begins at 8. And this is very interesting, I will say, because Asian session, we have these highs here. They're kind of equal. All right, maybe someone thinks you're bullish because of that. Cool. We have a really, really clean London swing high here. Okay, nice little London swing high. Nothing wrong with that. People like to aim for London swing highs. Not only that, just like my last video, which is a lovely proof that it repeats, if you're bearish, last time we made a video we were bullish, but if you're bearish, you want to see London have made the high of the day. Above New York, midnight, open. Oh, look, it did it again. London made the high of the day above New York midnight open so perfectly. When you do that, combined, again, it's not a rule, it's combined with other confluences that make it make sense. If you're bearish and you see that London high of the day above New York midnight, you're like, haha, I can see something. So I was like, okay, that's raised my confidence more. So this liquidity up here is kind of high resistance, not loads, because I'm going to be honest. I know on the Nasdaq there was oh, fuck's sake, basically on the Nasdaq, which I didn't take this trade here. This was just me deciding which one to take. On the Nasdaq QuickTime, there was these equal highs up here, and I didn't like that. That was the only thing making me a little sus. But then the Nasdaq showed all these confluences, the same as ES. But the reason I'm not recapping the Nas, even though I analysed it, is because we took the trade on ES. Okay, back to ES. So, Asian high, yes, are equal. London swing, okay. But you got to understand that the reason this is high resistance liquidity to me is because bearish PD arrays are being respected and bullish PD arrays are being constantly disrespected all day, including with London high being above midnight. Also, we have some sweeps of internal range liquidity here, but you're seeing up close candles send price lower, and you're seeing down close, you're seeing up close candles being disrespected and down close candles being respected basically constantly. Yes, we're not going to respect these down close candles because they're not in a discount. We come up into equilibrium or premium before we use it. So we're using these equilibrium premium arrays. Again, when I make my mentorship, I will talk about discount and premium in depth, but basically here's a price lag here. If you just draw out the fib QuickTime, this is a really bad fib, this is not well colored, price comes into equilibrium before going lower. No matter what your bias is, most of the time price is going to want to come into a discount or premium depending on which way we're going. It's going to come into a premium if you're bearish, most likely, or at least an equilibrium. Okay, so London made the high of the day, we're heading lower. I'm seeing this big old displacement. I'm seeing pre-market, we had a respect of this bearish FVG. And I'm thinking, okay, if we are still going lower, if we're still going to these swing lows down there, there's absolutely no way that price should really disrespect this FVG. So my terminus, or my invalidation zone, for my bearish bias was this FVG. I was like, okay, I don't want price to go above this box, basically. Even more detail. If I just whack on news here, forexfactory.com, we had PPI news data at 1:30. So I was confident in some volatility because it's red news. Okay, so we have some injections of volume, right? Of liquidity, if you don't like volume. The 8:30 candle, which was the one with news, was the candle that manipulated this high into this gap. And because it was the news candle that did it, that adds even more confluences, because it's often the news events that will do the biggest manipulations before the biggest moves. So if you see a lovely manipulation in your favor at 8:30 news, that is a huge reason to add on to your bias. So the 8:30 candle right here was beautifully manipulating for us right here. Okay, cool. Let's get a little more deeper into this, because there's a lot I want to say today, because there's just a lot I want to say. There's a lot I want to show. So the 8:30 candle's here. And that literal 1 minute, it's funny because I drew out the 15 minute, it could have been any candle, but I knew it would be the news candle at 8:30, right? So the 8:30 candle right here, right? Manipulated, liquidity sweep, took out these highs, came into the consequent encroachment of this gap, respecting this 50-minute PD array. We ain't going below that 50-minute gap, in my opinion, okay, at that time. Cool. So we left that. So I'm like, okay, the only thing I was thinking is like, all right, are we going to sweep these data highs, high of news, one more time or not? So then we come to New York Stock Exchange Open at 9:30. Stock Exchange opened, we dropped down. I'm like, okay, maybe we're just going to leave these highs alone and we're going to go lower. But I wanted to see some type of manipulation. And this was just where stuff got pretty fucking awesome, if I'm honest. First of all, I didn't show this in the last video because, again, there's so many confluences, but to add to my clarity or not, I use regular trading hours liquidity. So I went on to regular trading hours on the 1 minute, and I saw what ICT termed the opening range gap. To draw this out, you want to mark out the settlement price of the previous day, and you want to mark out the opening price of the current day, okay? ICT will then stay on regular trading hours and trade like this sometimes. I don't like doing that, and I realize if you just go back on electronic or extended, and then you can see this fib here, although it's faint, just get the same fib, draw it on the same lines, do that, then delete the one, delete the big one, boom. Now you can see, if you're going back on regular trading hours, you've got the fib all drawn out, but you can go on extended, use all the other information, and still have this fib. Now, I actually said this on the NASDAQ, but it did the same thing on ES, but I'm going to have to go on the NASDAQ just to show the accuracy, because I just got to do it. I just got to do it. It was kind of sick. So, it's the same thing on the NASDAQ as it is on ES. Okay, just bear with me. When you get a big gap, like, let's delete that, it's kind of distracting, isn't it? When you get a big gap on regular trading hours liquidity, a big one, oftentimes, again, if it goes with your bias, price is going to leave it unfilled. But ICT said sometimes, even if price is going to leave it unfilled, it might fill the 0.25 upper quadrant only, then run away. And then later, it will refill it later in the day or later in the week or in the coming weeks sometimes, or months maybe. They can get left open for a while. And because this 2.5 quadrant was aligned perfectly with this FVG here, I was like, okay, price is going to make come up into here, respect this FVG, then we're going to go lower. That's literally what I said, and I hope I got it on my live recording. If not, I said it in my mind. I hope I said it live out my mouth, though, because that's pretty cool. But how did I know we're going to use this? Because we could have easily swept this and tapped the 0.5. Well, it's because even though I didn't take a uni, this is a unicorn model. Same as my last video where I longed off one of these. We've got a swing high, swing low, high, high, lower, low with a displacement through it. And what is this down close candle? That's a breaker block. So seeing a unicorn model, which is a very high probability reversal model, as ICT said, I'm going to quote him a lot because he's the GOAT. I knew that this breaker and this FEG was really, really good for price to do. So I was like, okay, I reckon if price goes up into here, it's going to respect it. But question, why would price go into it? Well, here's another time aspect for you. New York Stock Exchange Open Judas swing. I'd say about 60-70% of the time, New York Stock Exchange Open will fake you out. And when it fakes you out, there's usually a reason why it wants to go to that area where it's faking to. Maybe it'll be a low of London. Maybe it'll be a imbalance. Maybe it'll be filling the upper quadrant of the opening range gap in line with this premium array back to discount and premium. If you look at this price leg from here to here before this move happened, this is in premium. It goes up into a premium, not only a premium, an unfilled FVG, and then goes lower. So what happened was, when price went into this FVG and started to respect it, that's when I was bloody certain. Back onto ES. Okay? So on ES, it did the exact same thing, it just wasn't as clean, because the FVG was kind of smaller and it kind of disrespected the FVG. Not disrespected it because we used the breaker, but just draw out the same thing. We draw out the breaker and price completely closed within it. There you go. The bodies closed within it. Wicks do the damage, body tells the story. Wick, tap the 0.25 quadrant, go straight off it, and then the FVG here getting used. Just so you know, I primarily prefer to analyze the NASDAQ than ES. ES is more my secondary. I always analyze NASDAQ primary, but if I see a entry on ES that is better, I'll go for it. Okay? Okay. So this was my trade. Okay? I'm actually going to just quickly check something. 1 second. I didn't journal my trade. I didn't take a picture of my own fucking trade because I was too busy making videos. Fantastic. Doesn't matter. So, even though right here you could say swing low, swing high, lower low, higher high, lovely displacement, unfilled opening range gap, understanding the draw on liquidity, as we tapped into that 0.25 and as we respected this unicorn breaker block with a liquidity sweep into the consequent encroachment of a 15-minute PD array, all beautifully time frame aligned, because as I said, the 15 aligns with the 1. Okay? As soon as we came back into here and we go to the CE of this gap without even needing the consequent encroachment violated, when we created this displacement, I don't think I got the exact entry. I think I was a little lower, like something like this. But I was like, booyaka, we are flipping short in this price action. So off of this, I shorted it. It was a little interesting because this is the first presented FVG right here. But then we'll get to that in a minute, actually. So basically, I shorted here and then I aimed for about 2R. So it was something like this. Again, you'll see from the actual recording where exactly I entered, okay? But I've forgotten because why would I remember exactly? So I entered here, short, and where did I target? Sorry, it's gone the 15, probably made more sense. Well, I targeted the swing low we were talking about on the daily chart. I targeted those swing low. There's liquidity there. There's people longing there with their stop losses under here. There's people, loads of people, who think, oh, it bounced here, it must be safe. So they've just got their little stop losses over here, and they're aiming up there. And to be fair, if you would have bought there, what a trade. But there's people who, like, think once it goes back there, it's going to be safe. Not the people that bought here. The people that bought here won. But people here are going to now long, thinking this is safe. There's going to be a lot of stop losses here. And there's going to be stop losses from people who are still holding positions from there because they think it's safe. That is liquidity. That is where the market will manipulate. Okay? Again, in the future, I'll make more videos in depth on liquidity. For now, I'm just showing you my analysis and why the hell is this arrow huge. There we go. Cool. So I entered there and I targeted the swing low, something like that, wherever it went to. When I entered the trade, I didn't like one thing a lot. I hated that NASDAQ, bastard, it inverted the first presented fair value gap, which I'll get into, and then we went to those lows and started to react. When it started to react, ES was doing this after having not gone to my target, and I was a bit worried about that. I was like, wait a minute, is this going to form an SMT divergence? Which you don't know what that is. That's for another video. I thought, is it forming an SMT divergence? And I was like, okay, it could. But then understanding on the NAS, we had all these lows below here, and this equal low that we made here didn't even sweep this previous day low. It just tapped it. I was like, nah, we're engineering liquidity. So I kept myself calm, didn't get fearful and close my trades. And just for the record, I'm really good at holding trades. That's something I curbed last year. At the minute, it's just my entries need a bit more calmness. Otherwise, I make dumb decisions. But for my holding trades, I'm pretty damn good at that now. I used to be too fearful to hold all these things. I've honestly, the last thing is just my patience and no FOMO and staying calm and making trading decisions from a calm place only. That's the only thing left. Honestly, there's nothing else in trading, touch wood, that I need to like curb. Cool. So entered somewhere around here and held for those lows. I could have took a partial about here, but I was like, what's the point of taking a partial there when there's a major low here? You might as well just hold a little longer and wait. And yeah, then we hit about 2R on the position. So that is how much goes into one trade on the measly 1 minute chart. There's a rhyme and reason to these markets. I know some people who think I'm gambling, and that's hilarious to me, because if you go on my back testing on TradeZilla, you're going to find years and years and years and years of repeated profitable trading, thousands and thousands and thousands and thousands, hundreds of thousands being made on back testing. What does that prove? If you, whoever the viewer is, if you can back test and repeatedly make a lot of money, what that means is you understand the markets, and whatever you do, you read them correctly and you can pull profits out. But if, like me, you trade live and there's a bit of a discrepancy, then you need to sort out what is it about your mindset or about the markets that makes you make decisions differently, because there's got to be some difference in decision, otherwise you get the same result. And for me, I know exactly what it is, and that is, well, last night basically I made a decision. This again might work for me, might not. Before I enter any trade, I'm going to ask myself, am I in a negative state? Because it's only in a negative state where you're going to have FOMO, revenge trading, impulse trading, all these things. If I feel all right, then I'm not. Definitely not FOMOing, definitely not that. Again, there's a lot of reasons. There's a lot more depth on that, other videos. I've got so many ideas for this channel, so I'm sorry if you're sort of getting edged and I'm not telling you everything. It's just, I've got to remember that people don't want to watch a video that's 5 hours long, and that's how long I can speak about trading, and that to me will be a short conversation about it. So yeah, so I hope you enjoyed. I think today it was banging. I'm kind of annoyed about the month so far. You may be like, why are you annoyed? You're in profit. I'm annoyed because these two of those three losses in between are just losses that I know way better than. Losses that I would never take. Trades I would never take. Only the minus 353.70 I would take. I would take that forever. Let me show you it. Right. I've got my winning trades journal here, and I've got my losing trades journal. So that was the last video that I put up. Losing trades journal. This long was horrendous. I knew intellectually, I was like, oh, it could work. But in the back of my mind, intuitively, I could feel something was off here. And I still entered the bloody trade. Ridiculous. I lost this trade the other day. Absolutely fantastic trade. I'm very happy with this trade. I was completely wrong about the bias. Price flew away from me the other way, and I'm happy with that. I'm happy with that loss. I would take that trade every other day. I would never not take that trade. That trade for me would work out loads more times than not. I would always take that trade. Again, I'm not going to go through the context and make a big trade recaps over losers. Waste of time for now. And it was this. This trade was so degenerately bad. Basically, I wanted to long off this 5-minute FVG down here. That's what I wanted to long off. But instead, for some reason, I couldn't just wait. I got scared that price was going to run without me, and I just longed here thinking, oh, it could work. But what happened? Oh, price bloody went to this green gap. And what did it do? Oh, it went up. Oh, it went straight up to where we're aiming for. I was pissed, I'll tell you that. Because trading, once you know you're profitable on back testing, but you're stopping yourself psychologically, it's very frustrating. There is parallels between trading and gambling, because you're uncertain every trade what the outcome's going to be. Just like if you run the roulette table, you're uncertain of the outcome. The difference between trading is you're like a casino. You have an edge. Over 100 gamblers coming into your casino, you're profitable, and they can just sit back and make loads of money. because of the way the casino is made or however the business works, I don't know. With trading, with your back testing, you can see that you have a really strong edge and it plays out over years. And my edge is ICT Concepts and understanding liquidity and all these things. There's no gambling in this to me. It's so certain, not over every trade, but over 100 trades, I'm certain if I don't make bad psychological decisions, I'm going to be running away. I'll be running away with it. So this is the last thing that I'm trying to do. So there's the trading recap, but that this is more my documentation now where I am. I am bloody good at technical analysis, but I need to curb my trading psychology or I will never make it. But what that means is I'm basically there. I'm at the bottleneck. I'm literally right at the end. You can't get any closer to being consistently profitable than me without being it. I'm a dead ass break-even trader who experiences profitable spells but still makes those decisions that I need to weed out. I've weeded out not holding. I've weeded out fear of entering. I've weeded out impulse. I've weeded out so many different psychological nuances over the last year. 2025 was a year of weeding out the little cogs, the little nuances that stop me. 2025 was just like, right, I've got something here that really works. I need to just keep trading, forward testing, trading every week, and just see what is holding me back. And I've basically weeded everything out, and now it's literally flipping just this FOMO. I need to be patient, and I need to only enter when I feel calm, not when my mind tells me it's a good one, but my body's telling me not. I listen to my body over my mind in the situation. If my emotions are saying, there's a reason for it. Anyway, this is probably longer than the last video, so I'm going to have to say thank you for watching. I hope you enjoyed. And yeah, what a bloody trade today. I'm pretty gassed. You can't back up in a respectable place. But yeah, hopefully by the end of this month we could get a payout if my psychology improves. But I'll tell you right now, after this video ends, I'm going to be journaling, I'm going to be writing about it, I'm going to be meditating on what I've learned, I'm going to be doing a lot of my own personal stuff, and only once I've become the true master will I really start to teach, as I really want to do. I want to teach this stuff, because I think if you can do this, you're bloody amazing, because this shit is awesome, but it is hard, but it's so doable too. But anyway, yeah, thanks for watching, and peace.